Bloomberg Audio Studios. Podcasts, radio, news. From the heart of where innovation, money, and power collide in Silicon Valley and beyond, this is Bloomberg Technology with Caroline Hyde and Ed Ludlow.
Live from New York and San Francisco, this is Bloomberg Technology. Coming up, OpenAI pays $6.5 billion in stock for Apple veteran Johnny Ive's AI device maker. We discuss the impact.
Plus, OpenAI works to develop a major data center in the United Arab Emirates, a big overseas expansion of its Stargate effort to build out AI infrastructure.
Plus, AT&T agrees to buy the consumer fiber operations of Lumen Technologies. It's $5.75 billion. We'll discuss the AT&T CEO. And let's just dig into how OpenAI is planning that push into hardware, Ed. Joining up, as you say, with the legendary Apple device designer Johnny Ive. The tie-up came with, well, a pretty hot promo video.
I have a growing sense that everything I've learned over the last 30 years has led me to this place and to this moment.
Ive, of course, the creative mind behind designs of the Mac, the iPod, the iPhone. OpenAI acquiring his device startup for nearly $6.5 billion in an all-stock deal. This could pair, of course, some frenemies with Apple, Ive's former employer, and an OpenAI partner. It's complex. We bring in Bloomberg Opinion's Dave Lee, who you have a bit of cynicism around whether or not OpenAI and Johnny Ive can really take on Apple to bring us AI in a physical form. But what do you make of the promotional video? What do you make of the impact?
I mean, look, the video was incredible, wasn't it? The cafe they filmed it in belongs to Francis Ford Coppola, and I was saying to a colleague, it's almost like he directed it himself, right? It was so grand. Look, love Johnny Ive. Yeah, I think he's obviously an incredibly gifted man. I think this is an incredibly difficult thing for even him to achieve, because creating the kind of hardware, which their stated aim really is to topple the iPhone as the leading device of choice when it comes to interacting with computing. I think that's incredibly difficult, and I think for all the experience and talent that Johnny Ive has and the team that he's assembled, which Sam Altman called, I think, the most gifted, talented team ever assembled in history, which kind of gives you an idea of the hyperbole he's working with at the moment.
Marvel Unite.
Yeah, precisely. I just think it's an incredibly tall order. I think it's easier for Apple to solve AI than it is for OpenAI to create the new iPhone, put it that way.
Okay, so Dave, let me go back to basics on the story. What the entity, OpenAI and IO, is saying is that by the end of 2026, they'll have a range of devices, but we don't know what form factor, right? We don't know smartphone or, dare I say, chunky brooch a la Humane. I just want to get the basics of that out there. But to me, this seems like an acqui-hire, because what OpenAI is getting is not just Johnny Ive, but a team of other former Apple designers, and who are, according to the press release, remaining independents.
Well, look, this is all about bringing in the expertise that OpenAI just doesn't have. I mean, of course, look, they've done incredibly well in creating a leading AI company, and it's seen as being ahead of the pack still. And ChatGPT has a huge market share in terms of people who are willing to go to a website to put an AI prompt in and get what they need. The problem is that over time, I think that way of interacting with AI gets a lot less useful, and I think we're seeing signs of that already. We've seen how Google are putting AI straight into their search engine in a big way, and that's a way to capitalize on a tool that people already use, and they find AI that way. OpenAI doesn't necessarily have that same vector. It doesn't have a device like Apple. It doesn't have sort of Amazon's reach with the cloud. It doesn't have a social network like Meta. It doesn't have a search engine like Google. And so they have to do something, right? They have to create something that's going to be the place that people interact with OpenAI specifically. And a piece of hardware is the way to do that. This is a very good, albeit expensive, way to bring on that expertise. But then, the complications will follow. I think next year's keynote, if they decide to present it in this way, of this new device, whatever it is, and there's been reporting this morning that it's perhaps like a third device in addition to your laptop and your phone, there'll be something else. I mean, that's going to be a very watched keynote. I think it's a big ask to expect people to add another device to their day, because we saw, like you mentioned, with some of those other wearables, that people from the word go just weren't very impressed. I think Johnny Ive's probably going to be a better judge of making something people like than those companies perhaps were. But I still think he's asking a lot of people to get on board with.
Johnny Ive was pretty critical of Humane and others having tried AI hardware.
Yes.
What's interesting, though, is Eddie Q, the Apple executive, was giving evidence at that Google legal fight, saying in 10 years' time we probably won't be using iPhones. We're going to discuss the Apple impact, but more broadly, do you think that this is a moment that we should be risk-off with Apple?
I think, the context of those comments from Eddie Q were in a competition hearing where it served the company very well for him to say there's a big threat against the iPhone. I do think what this is doing at the very least is highlighting the fact that Apple has been caught very much on the back foot. Since Johnny Ive left, I think it was almost 6 years ago, there hasn't been this sort of product visionary in the company. They haven't sort of hired behind him in a way that most people might have wanted. So I do think it sort of highlights that Apple has just huge amounts of work to do.
I want to go back to basics even further. Like, I think about how I use ChatGPT every day, and I use it through my iPhone, frankly, either voice mode or for auto text. How much of this story is about OpenAI thinking to itself that exact question? How are people going to use our software in the future?
Yeah, I think that's a big lingering concern, I think, for the entire company. Particularly as, as Caroline just mentioned, I mean, this was, Johnny Ive has been quite outspoken about what he sees as legacy devices of the iPhone and of Mac, just laptops in general, I guess you could say. I do wonder what this announcement might do for OpenAI's relationship with Apple, incidentally, because obviously you can use ChatGPT on the iPhone now as a sort of almost add-on service. I wonder if Apple might be thinking a bit more carefully about how they manage that relationship. But yeah, I just think this is about bringing ChatGPT into an everyday device in a way that's going to be much more integrated. Right now, as you say, people use the app. But I don't think this is going to be something that people go to an app specifically for. I think it's going to be a tool that's within a tool they're using for something else. And that's the big challenge they have.
Focusing on Apple, the point of your opinion piece this morning is that this is a bet by Ive and Altman that they might be able to kill the iPhone. And that's what drove the market in yesterday's session. Bloomberg Opinions, Dave Lee, thank you very much. Stick around for more OpenAI news as the company helps develop a major data center in the UAE. More on that later this hour with Chris Lehane, Chief Global Affairs Officer at OpenAI. I want to talk more about Apple. President Trump has taken aim multiple times at the tech giant, most recently calling out a little problem with Tim Cook, asking the Apple CEO to stop building in India. For more on Apple's political concerns, Bloomberg's Ryan Vlastelica joins us. And, the point in your markets piece is that headlines are not going in Apple's favor right now, but the stock is underperforming as a consequence.
Yes, pretty dramatically underperforming, especially over the past month or so, where the NASDAQ 100 is up double digits, give or take, and Apple is, I think down a couple of percentage points. So certainly just a negative political backdrop for Apple. This is just sort of the latest example of this. Obviously, it's not as dramatic as we saw at the start of April when the tariffs were first announced and Apple saw really historic levels of volatility. Since then, of course, we have seen some positive signs like exemptions for smartphones and other electronic categories. And of course, we had the sort of the detente with China with respect to some of the tariff levels. But there's still, being in the attention like this is certainly a precarious position to be in, especially since people don't really see what Apple can do, especially in the short term, to sort of, assuage some of the administration's, stated complaints about its global manufacturing footprint.
Yeah. We're looking at a one-year chart of Apple right now. It has come up significantly from its lows. We sold off hard because of tariff anxiety. We're now up 17% from those lows, Ryan, as your story points out. But when you couple the ongoing worries of the Trump administration putting Apple and Tim Cook individually in the line of fire, at the same time as OpenAI seems to be coming for its lunch when it comes to hardware with AI, none of this speaks well. And you talk about how under-owned Apple is.
Yeah, so that was a Morgan Stanley study that was put out not too long ago looking at the first quarter. Portfolio managers are underweight on Apple relative to its position within major benchmarks, just a sign of the sort of overall cautiousness towards the company right now. You mentioned the AI position. It is very unclear how well they are going to be competing in that realm. In addition, we have just sort of long-standing concerns about its valuation, about its overall levels of growth, especially if people aren't as eager to be buying iPhones. And of course, on top of that, the political backdrop with tariffs, with trade wars, and just sort of all this stuff putting together, it's certainly a lot of stuff for Apple investors to be considering, if they're looking at the stock right now.
Marvelous, Delica. Really well-read piece. Thank you so much. Now, coming up, AT&T CEO John Stankey is joining us next on the company's latest acquisition. It's all about Lumen. This is Bloomberg Technology.
AI is becoming mission critical for every enterprise on the planet in order to compete, transform, innovate. And the second kind of major trend is really about consumer. And wireless and fiber demand curves are converging. And you really need scale to compete in the fiber to the home business. So we looked at both of those trends and said we're going to double down where it makes the most amount of sense.
That was Kate Johnson, Lumen Technology's president and CEO, after AT&T agreed to buy its consumer fiber operations for $5.75 billion. Joining us now on Bloomberg to discuss all of the deal is AT&T CEO John Stankey. John, it is wonderful to have you joining us. And we heard from Kate, this converged customer that you've spoken to on your earnings. Is this the strategy behind beefing up when it comes to fiber?
Yeah, Carolyn, as we've talked about before, we believe there's going to be this demand for increased data consumption and workloads moving forward, especially upstream workloads. And there's no better technology out there for Americans than fiber. And we've got a big lead on how we're building fiber in the United States today, and this just accelerates it. And if you think about what we're doing here, we're effectively getting a little bit over a year's worth of build in this transaction. We managed to go into a footprint that because there isn't scale right now in the Lumen operations, we can bring the AT&T scale behind it, drive penetration of customers, which drives revenues up. And most attractive to us is that these are markets where we're kind of under share in wireless business as well. And we know that when we put fiber in, we win. And we have a good success record of putting customers together. 40% of our AT&T fiber customers use our wireless service. So we're really anxious to get a chance to get into these markets and start driving some wireless growth that maybe we wouldn't have seen otherwise.
You bring customers together. John, you also bring infrastructure investment together. You have partnered before with BlackRock when it comes to reinvesting and accelerating the infrastructure build out. You're talking about bringing in another partner in terms of investing in this in the future. Have you had interest already?
Oh, sure. Look, we've been really successful with our Gigapower joint venture with BlackRock, and they've been a fantastic partner to work with. We're incredibly pleased with how that venture is maturing and where it's going. The right thing for us to do right now is to carry this through the regulatory process where we have control over doing that and ultimately get this transaction closed. But we're really excited to bring an equity partner in with us under a very similar construct to what we did with Gigapower. And I wouldn't be surprised if BlackRock might be interested in continuing in that relationship. And if not them, we know there's others who like these kind of infrastructure plays. And I think we're viewed as a pretty attractive partner, given our ability to build rapidly and what we've been able to show in terms of our market penetration and growth.
John, who would that equity partner be?
Well, it's to be determined. We'll ultimately close it first. That's our really important thing to do right now, is make sure we get all the regulatory approvals. And then, we'll do the right things with the various folks out there to make sure that anybody who has an interest has a chance to talk to us about it. And I would expect we've had a great relationship with BlackRock. And if it's something they're interested in moving forward with, I'd certainly like to move forward with them. But that doesn't foreclose another option if for some reason this isn't right for them in the timing.
John, this deal and a number of other things that you've done really intensifies competition in broadband, particularly for Comcast and Charter. Just thinking about our show, Bloomberg Technology, and all the people across America that watch it, why is that competition important?
Well, look, I think what's important is that Americans walk away with great infrastructure and that communities have world-class communications infrastructure that allows them to grow and have commerce and have jobs and people that want to locate to their areas. And the cities that we're going into and that we'll be picking up here have frankly been somewhat underinvested in fiber. And fiber's the best technology out there. It's better than anything that cable has on the market. And so our belief is that this is going to be great for those local communities, because not only are we buying these assets, but we're making a commitment to nearly double our fiber footprint by the time we get out of 2030. That means we're going to be investing and growing in Denver and in Seattle and Salt Lake City and in Phoenix, in Minneapolis, St. Paul, putting the best technology out there and employing local people who do the construction and hiring technicians that do the installation in houses. That's a great thing for communities, and it's a great thing for the United States, because you're going to get world-class fiber infrastructure that's built for the AI revolution, that's got symmetrical speeds down and out of the house. That's going to be good for everybody.
There seems to be M&A for everybody as well, John, when it's you partnering with Part, buying that part of Lumen, when we've just had Charter and Cox when it comes to broadband more broadly. Are you going to be more active in the M&A space, do you think?
Well, Carolyn, I've said, I think even when we've spoken before, that my belief is that the communications industry is going to go through a layer of consolidation over the next decade. And I've been pretty clear that AT&T has a unique position. We start with a fantastic asset base as other companies are looking to bring capabilities together to meet the converged dynamic that customers want to buy from one company. And we have a lot of organic opportunities to invest in our business, and we talked about that in our December Analyst Day. What's unique about this transaction is it accelerates the footprint, and it's a make-buy decision that looks pretty straightforward. It looks like maybe in this case we should have bought instead of made. Look, if there's other options that come up that are similar in the economic dynamics where we can pick up footprint that accelerates us by a year or two, and we're buying it at a price that's similar to what we can go out and invest in organically, I wouldn't be closed-minded to that type of thing, but I'm not sure that there's going to be that many opportunities of scale to do that. In fact, this particular transaction is a bit unique, given its size, the markets, and the footprint, and I don't expect that there's going to be a lot more behind it.
John, there had been reporting in April about a sort of lack of knowledge of the Trump administration's approach to, particularly in rural areas, broadband and fiber, and perhaps not releasing funds from the prior administration. What was your communication with the president and the administration about this, and how supportive are they of the kind of big picture that you outlined to me a moment ago of what you're trying to do for America?
Well, certainly the administration would like to see investment, and the entire tax plan that they're putting forward is stimulating that. And if we get what has been passed by the House last night or this morning, I absolutely believe we'll be taking some of that benefit on the tax side and increasing our pace of fiber investment in our business and in some of these markets I just talked about. Our communication has been, there's been a lot that's happened since BEAD was envisioned almost 4 years ago, and the legislation was put in place, and the legislation that said it should be a technology neutral investment to build to these rural areas or places that aren't connected to the internet. And when you look at what the FCC said were the uncovered households last year, it was only about 7.5 million households. That's almost half as many households as when Congress passed the $46 billion for BEAD subsidy. The private industry, private markets, and whatever government funding has been out there has already solved half this problem. And so should we be taking a step back and thinking about how we're spending that money, and are we doing it the right way, where maybe we use satellite technology to get to very expensive locations instead of building fiber out there? I think that's the right thing for the American taxpayer, and I think the administration is doing the right thing to reconsider that.
John Stankey, AT&T CEO, it's been wonderful speaking to you on the deal. Really appreciate the time. Thank you very much indeed when it comes to all things M&A. We're going to take a quick check on the broader markets right now, and all things partnerships and ability to trade names outside of the United States. We want to be discussing how Nvidia and Tesla shares popped today. This is as we understand news that, well, Backed Finance is going to be partnering with Kraken to enable you to trade these US names in a tokenized manner if you are based outside the United States. So if you are based in Europe and you want to be trading Nvidia or Tesla stock throughout the night on a 24-hour basis, you can use a new tokenized basis for this particular stock. The person that's driving that is Kraken Co-CEO And we speak to him now with Sonali Basak standing by as well. Sonali, take it away.
Caroline, thank you so very much. And Arjun, it's good to have you. Of course, that is Arjun Sethi joining us, Kraken's co-CEO. This is big news in the world of tokenization. It's big news for Kraken. It's available to people who are outside of the United States. And my major question really is how soon this could be brought onshore in terms of approvals on a regulatory basis to get this done.
Hey, thanks for having me. I think the way to sort of think about it is that tokenized securities is the same way in which you should think about collateral. So collateral is the foundational trust layer, is the way in which we want to be able to help enable and enumerate this worldwide. And so while we're launching this with Bakkt and our other partners with Solana in Europe, in Latin America and Asia as sort of our first markets, we are going to work to bring this into the United States over a period of time. But I think what's more important is that you now, for the first time, have collateral that you can take with you 24/7. It's permissionless. You don't have to ask anyone for it, and it's not part of a walled garden. And I think that's the key aspect of what it means to be able to tokenize an asset.
One issue, though, Arjun, and you could see it coming from a mile away, is if you bring it to the United States, how do the traditional exchanges behave? This is not something that you can see the likes of a NASDAQ readily allowing or not pushing back against as you go to the SEC to get this done in a bigger way.
I think it's pretty natural for incumbents and what I'd call post-World War II brick and mortar companies to always push back against what they might have a monopoly upon. And what does that really mean? It's a walled garden. It's hard to innovate. It's hard to build on top of it. So when you think about global liquidity, global developers, global access to capital, global access to collateral, what do you want to build for and what do you want to build against? I think these types of products, it's not going to be just us, but anything that's happening in the crypto protocol ecosystem or decentralized, is that we're letting people get access to be able to innovate on behalf of US customers in the long term, on behalf of European customers and rest of the world customers, is that you're able to finally, in one place, get access to global liquidity, right, access to more products, and not part of one, again, walled garden. So we're an exchange. Our whole goal is to be able to provide liquidity and to provide this innovation. But what you're now able to do is figure out ways in which the traditional industries, as you just mentioned, how can they be a part of the ecosystem rather than being sort of left out?
Well, they need regulatory clarity. Arjun, great to have you. Look, Superstate already acknowledged that they're doing this. They announced it earlier in the month. You're now doing it. But Larry Fink and Vlad Tenev at Robinhood, they want clearer guidelines here in the United States. How briefly do you think that will occur? 30 seconds.
Look, I think with any of the regulators that are out there, from policy down to regulation, what we're really talking about is how do we innovate, how do we build? So, the folks at the SEC have been extremely promotive of these types of ideas around how do we bring this to everyday consumers, how do we bring this to everyday investors. And so I'm pretty positive that we'll get to a place where we can start thinking about how to launch this. Again, not just with one company or one customer, but across the board.
That was Bloomberg Sonali Basak there with the Kraken Co-CEO Arjun Sethi. Thank you.
Welcome back to Bloomberg Technology. I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco. I feel like there's a little bit of outperformance in technology shares, Cara.
Maybe a little. After yesterday's pretty brutal sell-off, we saw the bond market dictate trade yesterday. Maybe a slight resilience in the bond market today helps just galvanize some risk-taking back in tech. We're up just 0.3% on the Nasdaq 100, clawing back some of yesterday's losses. But as you say, big tech is in charge when it comes to some of those names we've been looking at, the Nvidias, the Teslas. But look at what's happening in terms of some of the earnings that also rang out. An outperformance when you think about what's happening with Snowflake, up almost 12% on its numbers. They're basically seeing product revenue drive forward because of new AI products that are coming to bear. They're managing to drive, at least in this fiscal quarter looking forward, $1 billion worth. People liking that 25% growth. Zoom also had showed that AI tools are helping their revenue, and they raised their forecast, but not enough to impress investors. We're off by 1.4%. But look what is not trading well on the back of AI. Now, today we get a little bit more resilience in Apple, but not much. We're off by 0.5%. We were lower by more than 2% yesterday. Where is their AI lead? Perhaps being taken by OpenAI, Ed. There is a concern, of course, with the the deal with OpenAI managing to bring on for $6.5 billion Johnny Ive's company. Will they lead the charge in hardware of AI? But there's so much more news when it comes to OpenAI as well, Ed.
There is, but first I've got some breaking news crossing the Bloomberg terminal. Google, or Alphabet, the parent of Google, is facing a Justice Department probe, an antitrust probe into its deal with Character AI. The Justice Department's looking into whether Alphabet violated antitrust law with its agreement to use the technology of the popular chatbot maker. Antitrust enforcers, Bloomberg is reporting, citing sources, have recently told Google that they're examining the structure of that agreement between Alphabet and between Character AI. The shares paring a little bit of their gains, but as we've been talking about, there's been some momentum in the stock this week. Okay, staying with AI, another big story. OpenAI is set to expand its Stargate AI infrastructure program internationally. The company's partnering on a 5-gigawatt data center cluster in Abu Dhabi. Joining us now, Chris Lehane. He's the OpenAI's Chief Global Affairs Officer. How did this come about? Yeah. We know the details. This is a huge project. We can get into it. But there is a backstory here that many want to know about. Who was involved from the UAE? Who was involved from the administration on this side? Yeah. And who is involved at OpenAI?
Yeah, I think there's multiple sort of, as you're alluding to, streams that have come together here. First of all, OpenAI has been talking about this concept of how do we build democratic AI? How do we allow the fact that the U.S. is leading on the innovation to leverage that lead to begin to build democratic AI rails around the world? We've been having this conversation for more than a year, countries all around the world, including in the UAE. The new administration comes in, President Trump comes in. I think there's a real vision to have what I would sort of call a commercial diplomacy approach. That includes both how we can use our technology, again, to build these democratic rails around the world, but also as part of that to bring investment back into the U.S. And so with the president's trip last week to the Middle East, particularly into the UAE, I think that was really a catalyst, a moment to bring all of these different streams together. And, you know, the administration was in the middle of really trying to forge and facilitate all of this. And ultimately what we're announcing today, I think, is really one of these win-wins, right? It's a win knowing that there are two countries in the world that can build AI at scale, the U.S. and China. We want as many countries as possible building on U.S. rails. So a win there, Chris, and a win for the investment back to the U.S. Sorry.
Can the UAE do it at scale? 5 gigawatts of electricity is an insane amount of power for a nation like the UAE. I'm just going to read this because I couldn't believe it. The International Energy Agency and its data show that the entire country generated 155,000 gigawatt hours of electricity in 2022. That's about 17.7 gigawatts in total. In other words, this data center will consume 1/3 of the entire country's energy. How on earth are they going to supply it?
So, you know, Sam Altman, our CEO, has talked about the fact that as we move into this intelligence age being driven by AI, like there will be two components that really drive this. Access to electrons, energy, and then how the innovation moves forward. Those two things really move in concert. Look, when you're talking about the UAE and we're talking about this particular facility, it's 5 gigawatts over a time period. Our particular piece and what we're really anchoring on is that we're going to do 1 gigawatt. And within that 1 gigawatt, about 200 megawatts, I'm sorry, I'm getting into a little bit of details, but 200 megawatts coming online over the course of next year. So I think the way to think about this is it will likely go in a series of stages. What I think is really impressive and interesting about how we're thinking about this particular partnership is that we're going to bring AI to the entire nation, to the entire country. It's going to be accessible for its citizens. It's going to be used by the country to advance transportation, energy modernization, healthcare, education. So a really interesting way to think about it. And if you think of AI as almost a nation-building technology, right? Countries around the world understand that this is maybe our generation's equivalent of electricity. Again, two countries that can really provide it, the U.S. and China. And so there's an opportunity here to really work with these countries to create interesting models. We have Stargate in the U.S., which is our infrastructure project here in the U.S. We now have Stargate in the UAE. And, you know, our hope and aspiration and plan is to begin to do this around the world. Right. In fact, Jason Kwan, our Chief Strategy Officer, is heading off to Asia next week for a series of conversations to build on this.
Are there one or two countries in Asia, Chris, that you're focusing in on?
I think when we look at Asia, right, we've talked about sort of stage one or initial stage of this, what we call OpenAI for countries. We're going to look at countries in Asia that I believe you would sort of put in the category of being historic U.S. allies, historic U.S. partners. Jason's going to be traveling into countries like Korea, Japan, Australia, Singapore, all places where we're going to be having those conversations. And I think as we get into those conversations, we will learn a lot more. You know, to date, we've already had more than 30 countries around the world reach out to us to want to talk about OpenAI for countries. So there is great interest. And I do think what is going on here is that the world understands that we are in a moment, that there is an imperative to getting access to this technology. The U.S. does have the innovation lead right now. And can the U.S. leverage this lead to bring our version of AI, a democratic version, to the rest of the world, and as part of that process, bring investments back to the U.S. as well?
And what then, in terms of those investments in the U.S., is the limiting factor? If energy cannot be brought to bear of 5 gigawatts in the UAE, it certainly can't be here in the United States. What sort of time frame are we going to be able to have the infrastructure necessary to bring generative AI to the masses, to bring hardware, which you might be now teaming with Johnny Ive to bring by 2026?
Yeah, so first of all, on the UAE question, having spent time there last week, I do think this is a country that has a real plan and a real strategy. So I am certainly confident that they're going to be able to get to where they want to get to. We feel a great deal of confidence in the ability to deliver on the 1 gigawatt that we've agreed to in terms of the data center. Now, just 2 weeks ago, I was in Abilene, Texas, where I was visiting one of our sites as part of U.S. Stargate. It's going to be over 1 gigawatt of energy. There are 3,000 workers on the ground, electricians, plumbers, metal workers, carpenters. Sometimes, apparently, the numbers increase, go from 3,000 to 10,000 workers on the ground there. Look, this is a country, the United States, that has a history of thinking big, acting big, and building big. And the conversations we're having on U.S. Stargate with other states around the country and Texas really has shown to us that there clearly is a path to be able to move forward in developing the type of infrastructure that we're going to need in the U.S. Yes, there are challenges, but I also think there's an understanding that we are in a global economic competition, that infrastructure is destiny. It's the key to the U.S. maintaining its lead. And so there is a lot of support and, dare I say, even energy behind getting access to that energy.
Chris Lehane, it's great to have you back on the show, OpenAI's Chief Global Affairs Officer. Thanks for talking us through the deal. Coming up, digital physical therapy services, Hinge Health. It goes public. Company CEO joins us next. This is Bloomberg Technology.
For the first time in Europe, sales of China's BYD electric vehicles overtook Tesla, and that was in the month of April. Let's get out to Bloomberg's auto czar, Craig Trudell. This is really key data, a key moment. In particular, 24 hours or so after Elon Musk told Bloomberg that it was not a Tesla unique problem, weakness of sales in Europe.
Yeah, I think when you look at the sales that Jado released today, one of the key things that comes across here is that going back before April, BYD wasn't even sort of sniffing Tesla sales really until early this year. And so for them to, pass Tesla in this region after, for so long, Europe being a weakness, we heard Musk, sort of offer the excuse that Europe's been a weak market for Tesla. But that isn't exactly right. When you look at the electric vehicle segment, Tesla has been a leader here in Europe until recently, and for them to be off to such a depressed start early this year, as you see, Volkswagen be so strong, BMW, you see Skoda there was a huge, gainer in the EV segment, and BYD really cracking the top 10 and beating out Tesla in the process. I think it's really, the sort of watershed moment that is going to turn a lot of heads and make people sort of appreciate again, just how much of a challenge Musk may be having with his brand and his image in this region.
Craig Trudell, thanks for bringing us the latest from Europe. Now, return to the US. More IPOs are being lured off the sidelines now that the market has shaken off some of those tariff concerns. One company making the leap to go public today is Hinge Health, which priced its IPO at $32 per share and is indicated now to open higher on the markets. Hinge CEO, co-founder Daniel Perez joins us now. Daniel raised more than $400 million. What is the opportunity to grow now? What is the size of the market that you can now penetrate?
Well, thanks for having me, first of all. Our vision at Hinge Health, is to use technology to scale and automate the delivery of care itself, and that is a fantastic opportunity. We've started with physical therapy, so we've shown that we could automate away about 95% of human clinician hours associated with physical therapy, which is about a $50 billion market here in the US, and 20 million Americans now have access to Hinge Health out of about 260 million adults in the US, only about 8% of adults now, across 2,300 customers, and yeah, we're just getting started.
Just getting started. You come in at a healthy more than $2 billion valuation at the price point that you priced at. But that's actually a long way from your original valuation back in 2021, when markets were a little more crazed, shall we say. Why come to IPO now? Why not wait for valuation to recover? Will you ever get to the $6 billion level again, Dan?
Well, look, when we closed our last private market valuation in October of 2021, it was 3 weeks before the NASDAQ peaked in that last bubble. It wasn't because of some, genius stroke on my end. It was divine intervention. But, I'll tell you what, since that moment, we have more than quintupled our revenue, doubled our gross profit, so 10x our absolute gross profit that we're bringing home. We went from losing $100 million a year to being free cash flow positive for the last 4 quarters and having a 12% operating margin in Q1. And so look, I can't control where the markets are going to go, but I can say that we held up to our end of the bargain.
Daniel, I've had hundreds of hours of physical therapy and physio, and I've left my rugby career behind. But I went and did that in person, physically. This technology convinced me that it's going to get a whole market of people that are reluctant to go and do that because they can suddenly do it through a digital medium.
Well, look, you're not alone. About 40% of Americans will have a musculoskeletal condition any given year. That ranges from like a sprained ankle through a twisted knee through, say knee or hip arthritis through just, chronic low back pain. And so 40% of us have a musculoskeletal condition in a given year. About 9% of us see a physical therapist. So there's a big drop off between those with the musculoskeletal conditions and those actually going to PT. And that's not because people dislike PTs. PTs are one of the most popular providers in the healthcare industry. But going to PT, taking 2 to 3 days off work, each week, paying a copay, paying a parking fee, which is kind of the hidden copay in America's healthcare system. It's really inconvenient. And so what we've done with our technology is to improve access, improve convenience, improve personalization, and substantially lower costs. And that's why we've been so popular with members and with our enterprise customers.
The biggest complaint and problem for you growing the top line as well about virtual health is the insurance factor. Have you cracked it? Will you be able to move smoothly, billing through insurance, that kind of thing?
Well, you're absolutely right. Reimbursement or getting through insurance is one of the biggest barriers to innovation in healthcare. And so we're lucky 50 plus health plans and pharmacy benefit managers, including 5 of the top 5 health plans and all 3 of the leading PBMs, have selected Hinge Health as either their preferred or exclusive digital musculoskeletal provider. And this means self-insured employers who are buying us don't have to worry about contracting, IT security, procurement. They could turn us on a lot easier. So look, it was really tough early on, but we've shown a repeatable go-to-market motion to where we could onboard a lot of customers very, very quickly. And now 20 million Americans have access to Hinge Health. But we've got a lot of work to do because there's 120 million Americans get their health care from their employer and another 100 million plus who are on fully insured Medicare Advantage or federal plans. So we've got a lot of work ahead, but we have a really good head start and a repeatable motion.
Dan Perez, CEO Hinge Health, thank you very much. Some of the biggest holders of Trump coin are set to join President Trump for dinner later this evening. Among the attendees is crypto entrepreneur and founder of the Tron blockchain, Justin Sun, who revealed he was the top holder of the meme coin. I want to bring in Catherine Dowling, Bitwise General Counsel, to kind of help us understand why we are focused on and interested in a dinner between all the participants that I've just outlined.
Well, first, I was not invited to the dinner, so unfortunately. But I think some of the Trump involvement in the digital asset world has been incredibly helpful for the momentum that we're seeing in the industry. It has opened up a lot of doors, which is great. And we need to continue with that momentum. And there have been some aspects that have obviously created some noise around the edges. And I think that's going to work itself out.
The way that I look at it across many technologies, but in this case, we're talking about crypto, is that getting in front of the president can often inform his attitude towards something. As general counsel, do you actually see that moving one step forward, which is to legislation or something specific on the policy front?
I do, actually, but not just because one person has Trump's ear. I think there's been a very clear agenda set out by many very involved digital asset ecosystem, smart leadership folks who have been working with Congress. And we have a Congress that has a couple years behind it in experience with looking at trying to get legislation moving forward. And we're really finally seeing some of that momentum with the Genius movement has been tremendous. And it's a tremendous step forward, some of which is already baked into the market.
And yet, where's the Genius Act upon us? Senators Elizabeth Warren, Adam Schiff are basically saying, like, this dinner exactly shows why we are worried, why these rules aren't tough enough, because you've got a so-called pay-to-play occurrence with this dinner, is what they see. Corruption, foreign influence is a risk. Do you see that?
I do see it. I do see it more as noise, and I see it as something that we can segment. It's not a reason to not move forward with this important legislation, which is becoming more and more bipartisan. The more we move digital assets out of this kind of political noise, the better, because we don't want it to be influenced or to be have the momentum changed or challenged because of these conflicts. It's incredibly important to deal with those conflicts and to do it in a transparent way. And I do believe we can do both at the same time and meet both of those needs without saying all or nothing. We can't move forward on this because of this noise. But the conflicts are incredibly important to deal with, and we don't want that stopping up this incredible movement that we need to continue to see that is so important for so many reasons, one of which is to keep the U.S. at the forefront of expanding this technology. And that can't be underscored, Caroline. It's an incredibly important thing. We need to hold on to that mainstay, that core, and make sure that we deal with this noise on the side and figure out a way to create barricades around those conflicts so that it doesn't impact the movement we need to continue to push for.
And we actually been talking about the push forward today, tokenized assets when it comes to equities. We had the Kraken Co-CEO on talking about X stocks that's backed finance, that if you're outside the US, you might be able to have a tokenized version of Tesla or Nvidia stock to trade 24 hours. But they can only do it if you're outside the US. Are you optimistic that this sort of innovation will be met with regulatory clarity here in the US?
Absolutely. It's coming, and it's coming soon. This is just the tip of the iceberg, and it's incredibly exciting to see. But you're going to see more and more tokenization experiments. You're going to see beta programs just like this one. And I think that is a good sign of keeping this. I mean, look at tokenization. You can't politicize tokenization, right? It is blurring the lines between TradFi and crypto trading. It's changing the architecture. And if, at heart, that is what blockchain is all about, changing the architecture. Turns out Swift isn't so swift anymore when you look at blockchain technology in terms of how quickly you can settle, how quickly you can pay people on a global scale. And the more we focus on the technology and how we are changing traditional finance, the way we make payments, the way we make settlements, stablecoin is a great way, a kind of early core, look at how stablecoin works. If you can kind of focus on that technology aspect, move out some of the noise on the sides, make it less political, we'll get a lot further, a lot faster.
Catherine Dowling of Bitwise asking for less noise. We'll see if the administration acquiesces to that. That does it for this edition of Bloomberg Technology, Ed.
So many of you listening to the pod, check out the Bloomberg Technology podcast. You know where to find it, online on Apple, Spotify, iHeart, and all over the Bloomberg universe. From SF in New York City, this is Bloomberg Technology.